Stock, crypto, and options trading has large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose, and this is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. All right, good morning, everybody. Welcome to Snipers Live Trading. You haven't got to work at a car wash. We can sell credit spreads and operate at about 97% win rate, average APL about 13%. That's what we're doing here in Snipers. Welcome, everybody. Good morning. Hey, Jack. Paul, you got a haircut, man. Oh, you look like the most interesting man in the world.
Just out of the pool. 65 today.
Your age or the temperature?
My age. It's my birthday, 65.
Happy birthday.
Thank
Happy birthday.
Yeah, you're wearing that well.
Cheers. Thank you.
You handsome man.
Wow. Thank you. Thank you.
I got to show you where I'm at. I'm in a place called Balsar, Costa Rica. It's on the southwest corner. I'm thinking about buying this property, but look, what do you think?
Nice.
Yes, buy it.
It's 10 acres and it would be great for a trading retreat center.
Yes.
Now I do have land somewhere else. I got to figure out what to do with that. I don't know. Maybe I'll get both. I'll just choose both. We'll make it happen. So welcome everybody. It's always a pleasure to be with you all. Gerardo's with me today. Gerardo's going to share some things that he and I've been working on, and he and I trade about at least 2 or 3 mornings a week together. We trade the open. We look for those snipers, those pre-market movers, try to snipe some profits at 9:30 as the market opens with super high probability of profit. We've been doing really well with that stuff, and we're constantly refining it. And it's really nice to have a trading partner like Gerardo to help me with all that. So, all right, now let's just take a quick look at the news. This is what I always do. Every morning I do this. Stock futures rise as traders look ahead to the key inflation data. We'll look at that data in a minute. There's a report, CPI, well, I'll tell you, CPI, PPI reports coming out tomorrow and Wednesday as the Fed meets tomorrow and Wednesday, 2 p.m. on Wednesday. The interest rate announcement will be made, probably 25 basis points, although nobody really knows. And then at 2:30, Powell will speak. And that's when the party starts. If there is a party, we don't know exactly what's going to happen. So we'll see. Something to keep on your radar, though. Just taking a quick look at the news. Not seeing a whole lot here, at least on CNBC, Bloomberg. Usually a bit more concentrated news. I kind of like Bloomberg a lot. I can see a lot on one page. Morgan Stanley, Goldman at odds on S&P. So, you got the industry pundits claiming a correction. What makes some sense, we have had a really nice bullish run in the markets. We'll look at those in a minute, but not seeing a whole lot here on the news front. Going to the economic calendar, marketwatch.com / economy-politics calendar. And then you can see the reports coming out. Here's the CPI on Tuesday, PPI on Wednesday, jobless claims on Thursday. All right. So we want to see inflation abate. All right. So we want to see these numbers drop. The inflationary number, the consumer price index, and the producer price index, we want to see those drop year over year, maybe even go negative. The PPI is expected to be negative. The CPI expected to be 0.4%, which is what it was previously. So, these could move. If these numbers drop less than or more than expected, we could see further bullishness in the market, which is what we're seeing right now. Jobless claims, we'd want to see that number increase. It's expected to be 248. If it increases, that's good news for the market. And of course, the flip side is true across all 3 of those reports. So it's going to be a busy week this week. We could see a lot of market movement. So let's take a look at the markets right now. I'm going to go into the future symbols. The first place we'll start is the E-minis, the /ES. This is the S&P 500. And what was really important about Thursday and Friday of last week, look at that peak there, right at 4,300. Let's zoom in a little bit. and we got a nice little close above 4,300 on Thursday, and then Friday, boom, new high. That high has not been seen. Let's take a quick look here. I'm going to go to a max chart. The last time we were this high, each of these bars is a month now, was right back here in April of last year. So we're what? April, May, June. We're about a 14-month high as of Friday. And let me go back to a daily chart here. I'm sorry, that was Friday. This is today. What am I saying? Today, with the Fed coming up with the interest rate announcement on Wednesday, the markets have gapped up. All right, signaling potential bullishness. Traders, most of these are institutional traders, are not concerned about the Fed announcement. Typically, the few days before the announcement, the markets are like a deer in the headlights. They don't move, but they did today. Bullishness seems to be prevailing in the market. Let's take a look at the tech hot NASDAQ. Again, same story. NASDAQ at a over an annual high at this point, I think it's about 14 months as well. NASDAQ super strong. When I look at the NASDAQ, I also want to look at the XLK. Oops, XLK. This is the tech index. Pre-market, we're at about 167. So we're up a little bit. 167, or it's just over 167 is the opening price. Friday's action had us at 166. So when this high here at 168, you know, I like tech stocks. Of course, we've been profiting very nicely on them. But I would not at this stage do anything with tech until, guess what? Well, what do you guys think? What should we wait for before we would continue trading this bullish trend? Lots of consolidation, choppiness. We got support here at 163. Resistance up here at 168. That's a multi-month high and over an annual high as well. What do we wait for? What do we want to wait for before we go bullish using the basic? Well, Powell,
Mr. Fed and confirmation.
Yeah, I would say Mr. Fed is in there as well. Yes. And then confirmation, Jeff, would be a close above 168. All right. That's resistance. Don't wait. I mean, we could see some pullback. The Fed could announce and tech drop. You know, we just don't know what's going to happen on Friday. Yeah, good answers. Good answers. Let's take a look at the Dow Jones /YM. Same story. The Dow has gapped up pre-market. We're right at resistance, though, at these peaks. We'll see what happens there. We have super duper strong resistance right up here at 34,500, right at these peaks there. So we're at this place. It's you know, it's a little toppy, certainly on the Dow. And the Russell 2000 /RTY, really nice bullishness over last week, wrestling currently with, let's call it 1900 resistance. All right, so that market's a little toppy. All of them are actually. And then, of course, you want to look at the VIX, which is really reaching mega lows. Oh, hold on a minute. I saw something that's interesting. Let's go to the VIX futures first. VIX futures are up a little bit. We're up to 1540, about pretty much flat, a little bit up on the VIX futures. The actual VIX from last week, you know, really low, man. The VIX is so low right now. In hindsight, if the market's correct, we're going to come back and say, hey, look, the VIX was low. That's why the market's dropped. That's not why they drop. They don't drop because of the VIX, but the VIX can tell you to start looking. Options are really cheap, cheaper than they've been in a long time. And that is a condition when markets correct. And we could very well see that markets are quite toppy. So that's the complexion of the overall markets, and we need to trade accordingly. That's why this analysis is important. Every day, it doesn't change much during the week, but certainly every week you got to do this and get a general prognosis or a sense of where the markets might go. It's always might go. We don't know for sure what's going to happen tomorrow in any aspect of life, really. Oil is really cheap right now. This is the oil futures oral. It's going to get to a point now where we might want to start thinking about selling some puts down here. OPEC's not going to let oil keep dropping like this. It'll keep cutting production until the price, and then the demand is still remains the same for oil, of course, and that drives the price up. So that's likely. I like this as a put spread, but let's wait for it to bounce a little bit. I would expect a similar bounce at 65 as it did here, as it did there with that beautiful hammer pattern. Look at this hammer pattern. If I see that or that in the near future, we're coming in and we're going to sell some put spreads underneath. Super duper fragilistic, expialidocious strong support at 65. So let's wait for it to stop dropping. I'm excited about that one. I just saw that. Yeah. Gerardo, let's put that on our list, man. We're going to look for oil to bounce and we're going to sell some put spreads underneath. You all do the same. And if you want to trade oil, you can use the USO right there. And on the USO, support is, I would say 60 is good, 58 better. Again, look for a bounce pattern of some sort, preferably a hammer, and then come in and sell some puts underneath. Oil's just not going to keep dropping. It's never going to happen. Not why we're all using oil like we do. Gold futures flat, probably because the US dollar is flat. Not much going on there. I'm not sure. I wouldn't do anything with gold until after the Fed announcement. We can look at bonds as well. /ZB is for bonds, choppy sideways. Now on bonds, there's a lot of forces on bonds. One of them is interest rates. So as interest rates are lifted, if I take you through to a 3-year chart on bonds dropped, and they have been dropping since interest rates have been rising. So as the Fed lifts interest rates, that makes the bonds currently in circulation less valuable, and they drop in price. So that is a possibility for later in the week, depending on what the Fed does. And of course, bond yields are always fluctuating, both short and long term, and those also move the price of bonds. So that's a little tenuous. I want to wait until after the Fed announcement, maybe get a complexion from the Fed about possible future interest rate hikes. And if they come out and say no hikes expected for the balance of the year, if they did say that, then I would expect bonds to rise and vice versa. So let's keep an eye on the Fed announcement. Really important for this week. I think that's all I want to cover here. If I missed anything, natural gas, we can look at natural gas. Oh, here's another one I like. Look, $2 selling and we could do this today. In fact, just sell a $2 put, put spread, even long-term, and, profit as long as natural gas stays at or above 2. And even if it drops below 2, take the stock and wait for it to recover. Is natural gas going to go to 0? No, it's a commodity that people use, the world uses. Let's go to a 3-year chart. And you can see down here, natural gas was at one point, this was back in June of last year, did dip below 2 for a bit, and then kaboom. So we're at a bottom here. It could drop a little bit more, but it's certainly not going to 0. We could even, dare I say it, we could sell a 2 put, a naked put. I still love naked puts. That's when I first started trading, that's all I did. And I like them. So we could sell a 2 put spread. Again, we could do that trade today as well. So consider a two put spread, selling a 2 put, buying a 150 underneath, and just letting it ride. And don't even close it. If you get hit on the stock, just buy the stock, put the stock, and then sell calls against it. So there's another one. Simply going through the 4 corners of the market, we can find all sorts of opportunities. So I think I do want to do a trade on natural gas. We'll do that. And I'm going to use this ETF, UNG. All right. So UNG right around 6. So that's about where we're going to want to sell, maybe a bit lower. And let's see, natural gas. Yeah, that's about where we want to sell, maybe 550, but we'll look at that one as well. All right, let's take a look at our portfolio performance. And I got to stop talking about this because I'm going to jinx it. But this is our portfolio of credit spreads. We have one loser, and it was a big one. on Pinduoduo Chinese stock. We got hammered on that one, but that was the only one. Since we started snipers back in July of last year, we've put on 29 credit spreads. 28 of them were winners. That's a 97% win rate with an average profit per trade of 13.37% over 7 days. I'm not going to say much more about it. That's what is. And we're going to continue to follow the same practices and keep it going. I've never seen anything like this, quite honestly. And I've sold credit spreads for 25 years. So we've really been ringing the bell very well, and we're going to continue to do so. We had a Tesla trade last week. This one was taken off with the GTC order on this day right here on the 8th. We placed it on the 5th. And then 3 days later, let me turn off the closing legs here. And then 3 days later, we ended up with, a nice little, 14% profit in 3 days. So that's consistent with our average of 13.73%. And there you go. So let's keep that going. Now we've got about 14 minutes before the market opens. And I've asked Gerardo to share some stuff that he looks at. He's, Gerardo, I know he's going to get embarrassed, but I'm going to say it anyway. He continues to astound me. I've never seen anybody with such a high aptitude for trading. And perhaps perhaps it's because he's on like 6 calls a week doing Fathom links, but he's really come along. He's doing hedge fund strategies, pairs, all sorts of stuff. And he and I do this every morning. Well, not every morning, 2-3 mornings a week. So I wanted to just have him share with you what he does to find these pre-market gaps and selling premium right at the open at 9:30. So Gerardo, would you like to lead us in a little discussion about what we might be able to snipe at 9:30 Eastern?
That is correct, man.
Correct.
And everybody, it's really funny because once you start going in this world, you start figuring out that you just go to Google or anywhere, and there's plenty of tools there we can use to analyze stocks and find ideas and all that. And I found this, well, the first one I found is this barchart.com. It's a really, really nice website with a lot of information, especially for options, which is not as easy as all the rest of things on trading. But this one has one, and it has a pre-market stock movers. And as you can see here, it has the most active stocks, gainers, losers, gap ups, gap down. So every morning I come here, I check, especially the change percentage. And that's exactly what I did today. Let me show you the other website I used to check, and then we can talk about the ideas I found today. This is Market Chameleon. I don't know how you pronounce that.
You said it right, man. That's how you say it.
Good.
Category to say.
Correct. So this is the other one. There's something really cool with this one I found out today when I was checking, and I'm not advertising this because we have nothing to do with these websites, but this one has this part right here, and it's a study on how the stock behave after a gap or a big move at the opening. So if you have a premium thing here, you can just check that kind of things and have an extra information. Of course, we don't have it right now, but I think it's pretty cool if you are looking for these kind of strategies, that the kind of tools you can use to improve a little bit your analysis. So going after that, the first one I saw that I really like it was KDNY. And so when I find a stock in the list that I kind of like, next thing I go to my Simulate Thinkorswim platform and check the stock. And I did it with this. and it looks really cool. The stock is opening at 37.38. Right now it's 37.56. And then my next move is check, okay, why is that happening? And start researching about it. And what I found is this company, it's being bought by Novartis because something really good they are having. So I would like to hear your comments about this, Mike, because as a new trader in all these strategies, I'm not exactly familiar with the kind of news that could be good and could not be that good, because actually I was reading an article a few days ago that news are not even considered anymore a really good thing for analysis.
Well, that's BS. 97% win rate. Yeah, I mean, the short news at the open is like shooting fish in a barrel sometimes. And the news here, Gerardo, is that the company's being bought by Novartis for what, $40 a share? Is that the news? I think I read something like that.
Yeah, I think it was something like that. Pretty sure it was 40.
I can't see it now, but I when we looked at it this morning, I thought that's what I saw. So basically the stock, which is, yes, on Friday was trading for $23.99.
$40
bucks.
per share.
Yeah, so the stock is currently trading at 37 pre-market. The stock will probably peg out at around $40. So when a company is being bought, the stock generally shoots up or down to that particular or close to that price and will normalize around the purchase price. And so what that does, it's good news for what's this one? Chinook Therapeutics, KDNY, really good news for that company. But then the option market makers are like, well, this stock's probably not going to go anywhere, because that's what happens when companies are bought. And therefore the premium in the options will be reduced. Now, we still might be able to capture something at the open. So if you could just kind of scroll down a little bit and show where the stock is at, what is it, 37.38 or so. And you can kind of show everybody where, or even go pre-market. You can do the 1 minute bar and we can kind of see where it's at. And so the stock gapped up to 41. And so that was on the news. And now it's drifted down a bit to 38, let's call it 37.65. So we could come in and try, we could come in and try to see if perhaps we could sell a 35 put spread. So let's go to the option chain and just give it a shot. Now we're either going to get it or not. And the highest, we want puts here. Now the Friday's price is a lot, because this on Friday, these would be deeply in the money. And now with the stock at 37, likely to drift back up to 40, we could try to sell a 35.30. So let's hit the sell button there. And we're not going to get 485 for it. That's not happening.
Aww.
I know. You can ask, but they'll just go, huh, silly person. Why don't we sell for, let's put an order in for, I don't know, 25 cents. If we were able to get 25 cents on well, let's do the math first. So this is a 5-point spread. So let's think about it this way. This spread, this short put spread has a maximum value of the distance between the strikes. So that's 5. If we got 25 cents, then we would be selling this spread that has a maximum value of 5 for 25 cents. And if the stock stays above 35, the whole spread will be worthless. But if the stock tanks to 30 or below, then we'll lose. We'll have to buy the spread back for $5, and our net loss would be $4.75. So I hope that makes sense. Now you got to think in terms of max risk. Max value is probably the best way to think of it. So we're going to sell this thing that has a max value of 5 for 25 cents. So that's our max profit. And therefore our max risk would be if we had to buy the spread back for its maximum value of 5, and that would result in a 475 loss. So then you go, all right, this is a 1-week trade, right? So what if we made 25 and risk 475, then that's 5% between now and Friday. So that's a decent amount. But I think it's a little low. Let's try 30 cents at the open and see if we get it. I doubt we will, but it's worth a shot. Let me check the stock price again to see what it's doing pre-market. Where is it actually trading at the moment? It's at 39, 38 or so. So we are pretty close. I tell you what, let's ask for 50 cents. And if we don't get it, we'll just change the price. Let's go to confirm and send. Sorry. One last thing. Now, before we figure out how many contracts, we need to figure out how many contracts. So if we get 50 cents, then one trade, one spread would have $4.50 of risk, or $4.50. So we can only do one here to keep our max risk below 500. And in this game, it is critical that you set your risk at a level where you don't get taken out of the game on a losing trade, because you will get them from time to time. Although we haven't really. You will get them from time to time. So in order to maintain a good psychology, make sure that if you lost all of it, it would have a very minimal impact on your trading account. That number could be 2 to 3% of your entire account. I would lean towards 2. So keep the risk contained. The last thing you want to do is lose 25% of your account on the unthinkable. Let's stop tanking. Or Novartis comes out and says, we've dropped our bid. We're not going to buy the company, and then it tanks. That could happen as well. Probably not by Friday. So that's why we want to get in and get out in case that kind of news comes out. So let's go for 50 cents and see what actually happens at the open. Anybody got questions about that or comments? If you have any, the other thing I forgot to ask you in the beginning or invite you to do is if you have any stocks you're looking at, then please suggest. Leo points at NDAQ had a big drop. Let's check that one out, Gerardo. NDAQ, NASDAQ. What's this one?
I like that. I like that one. They announced they are buying a tech company, and that's the reason of that gap. The only thing I saw there is, let me change the period of time here. They're moving around 52, which is right here, and that if we can see here, it's a really support and resistance zone. So I don't know.
What you're saying is that 52 is support. That's where it's trading. We could get a bounce.
Correct.
Yeah. Oftentimes when a company buys another, it can be deemed initially as bad news, but we could very easily get a bounce off 52. What's it trading at now? I can't read that. 51 something?
51.45.
All right. So I would say on this one, Leo, I like it too. We both like it. On this one, if I was to sell anything, it would be at around 55. Yeah, let's get rid of that VWAP. It does junk up the charts a little bit. All right. So I would say 55 resistance would be as close as I'd want to get. And that is right above the 200-day average. It's right dead on super duper strong resistance now. I love that sound. See, I can't even think. I was in the middle of a thought and I was like, squirrel. Market's open. All right, calm down, Mikey. So now this thing will open up down around 52. I would wait to see what happens. Let's give it some time to breathe this morning. Maybe we come in a bit later, Leo. Let's see if it could bounce from here. that's not terrible news that a company buys another, and we could very well see a bounce off 52. Now, if the stock was well below 52, strong support, then I might consider doing it. But I want to let this one breathe a bit before I get in. And unfortunately, we don't have the live data here just yet, but that'll come in a minute.
You wanna take the screen, because it will take 15 minutes in my Thinkorswim, because I don't have.
You don't have any money in there. Yeah. Okay, let me go back to NDAQ. Yeah, see what I was saying, Leo? It's already bounced. It's already bouncing. And how high will it go? I don't know. I tell you what I would do here is sell a 58 if there's anything there. 58 resistance up here. That's a safe one. And it's gonna vacillate around, probably stay above 52, and we could very well see a bit of a bounce as analysts start to consider the impact of this purchase on the company. So let's just see what's there. Can I get a 58 call spread? I don't know. Let's go look. So I'm going to go into Thinkorswim, set this up as vertical, and I'm going to take a look. Where could I sell? Now, for Friday anyway, the only place we could get any premium is right here at 55. And it's not much. It's 22 cents on a $5 spread. That's just, that'll be what, we just figured it out. It'll be about 5% between now and on this Friday coming. But see, it's already starting to rise. I don't want to do it. I think that's a good hold. One thing you could do here, though, see the 60. I was going to say if we had a 58 put, we could sell here, but we'd have to sell at 60, and we're just not going to get anything up here that far away from the stock unless it recovers. So this one is a little tenuous. Let's take a look at KDNY, though. What's it doing? Yeah, it's hanging out up here. Gerardo, let's go back to your screen real quick and see what's the price on the put spread that we put out there. We go to the working orders, we can see.
That's 0.
I'm still showing 0, Mike, for the mid on kidney.
On kidney.
I've got a live trade going. So this is on Tasty Trade.
Okay. Yeah, it's not going to happen. That's what I was saying earlier. When a company gets bought, all the premium gets sucked out. So there's nothing to sell. The only way this could be worth any money is premium. And there just isn't any. And that's because there's very little chance that the stock's going to drop back down to that level. So they're not going to give you any money for an option that's very likely to expire worthless. So that one is out of play. Now, I was pretty sure that's what was going to happen this morning, but and Gerardo and I were talking pre-snipers. I said, well, we're not going to get filled on that, but it's a good lesson to start to understand a bit more about how options are priced when the directional risk is taken out of a stock because it's being purchased. All the premium gets collapsed. All the IV gets pushed out, and there's nothing there for us. So that's what will happen. Okay, now we're not done yet because there's plenty of other stuff I want to talk to you about. Now, I've talked about this many times before, but I want to talk about it again, and I want to slow it down a bit. So I want to talk to you about stacking the directional deck using top-down analysis. What's top-down analysis? Oh, that's the wrong slide. Here we go. Sorry. I did that at 5 o'clock this morning. So the idea is to look at the markets themselves and derive an opinion about the market. Now, when I say the market, I mean, let's look at submarkets like the S&P 500 or the NASDAQ 100 or the Dow Jones Industrial Average or the Russell 2000. Those are the 4 markets that we look at. And the idea would be to find either the strongest bull or bear amongst those 4 market indices. Which market is going up the most or which market is going down the most? So we start there. Why do we start there? Because 80% of the market of stocks in a market move with the market, pretty much. So if we can pick a market direction, if we have a solid market direction, then we can say, all right, well, amongst the stocks in that particular market, let's say the NASDAQ, for example, we might discover that tech stocks are the hottest sector. So then what you do next is out of the individual market, you find the sector that's leading that market. And then from there, you pick the stock that's leading the sector. It's kind of like a herd of horses, and we want to find the horses that are leading the herd. It's like that, either bullishly or bearishly. So we want to find these. When you do this top-down analysis, the directional probability increases. And then we can also, to pick the stock, we also want to, we can look for the stock that's leading the sector up or down, but then we can apply other directional analysis and fine tune that. And so the idea would be to really find the biggest bear or bears and the biggest, meanest bulls. All right. So we just looked at the markets. Let's take another quick look. I'm going to go through the ETFs now. Here's the SPYs. The SPYs are wrestling with 430, as you would expect. That's resistance. That's a bullish market. We look at the Qs. That's an even more bullish market. And then we can look at the diamonds. Yeah, I wouldn't do anything with the diamonds. Nope. And what about the IWM? So if you look at all of those, by far, the strongest market is the NASDAQ. Okay? So it would behoove us right now to find the tech stocks. Well, now I haven't done the sector. So that's the market. Now, how do you find the sectors? Well, you can go to a lot of places. This is one that I like. I use it all the time. Let me show you how to get there. You go to sectorspider.com. And then you go to tools here. They've changed their website, so it's a little different. Go to tools, go to sector tracker. What's your vector, Victor? And then you can look at different time frames. So over the last month, you can see here what the hottest sectors are. Tech has been the hottest sector over the last month. All right. Consumer discretionary has been just about as hot. Now, that's not a tech sector. Let's go to 5 days. Consumer discretionary at 2.68% was stronger than tech. Tech had a little bit of a break. And then today, consumer discretionary. Now, consumer discretionary isn't in the tech, is not really full of the tech. NASDAQ 100 is not full of consumer discretionary stocks. Consumer discretionary stocks live in the SPY primarily, SPY, which is also a bullish market. What's really cool about this one is it's right at this resistance level here. So I like consumer discretionary, but I'm only really interested in it if the stock closes, if the SPYs close above 430. And so far that hasn't happened. Let's see, Friday's close was, let's see if I can read this. Friday's close was 429.90. Resistance held. So far today, we are at 430.62. So that resistance level is holding so far. So that would say wait until the SPYs breach this point here, start trading above 430, closing there, maybe a day or two in a row, and then go after the XLY stocks. All right, there's your XLY stocks. Look at that. All right, so that's some low-hanging fruit, but I'm not prepared to hop in until we see the SPYs themselves close above 430. All right, and we got the Fed meeting on Wednesday, so it makes perfect sense to wait, but keep that on your radar. Consumer discretionary stocks after Wednesday. Start looking. If the SPYs start making a bullish run, then come into the XLY. And if you want to take a quick look at what stocks compose the XLY, let's look at a 1 month view. Consumer discretionary. If I click that there, it will show you the holdings for consumer discretionary. And guess who's on the top of the list? Tesla. which is a stock we played last week. And we made a good little profit, 13% or so in 3 days on Tesla. I would be willing to go after Tesla again right now. Other things that are a little surprising to me, I didn't realize this, but cruise lines are starting to take a run. Cruise lines are back in business. They are rushing up. Let's go to this. Let's just look at some of these stocks here. Carnival, CCL. Okay. Well, now the technicals are really compelling to me right now. And the reason is that Carnival has just gapped up. Let's check some news here. Bank of America Securities upgrades Carnival to buy from a neutral. Okay, so the Bank of America's liking Carnival. JP Morgan upgrades Carnival to overweight from neutral. I'm actually salivating right now as I speak. We might want to do something with Carnival. I know I'm off track, so I'll come back and finish the thought. Look at Royal Caribbean. And then NCLH, Norwegian. Norwegian's not as good. Why? 18 resistance. Resistance, and we're about to hit it. I wouldn't use Carnival. I would use RCL. I want to see if that's an annual high. Let's take a quick look here. Let's go to a max chart. Last time we were here, zooming in a little bit. These bars are a month now. Strong resistance right up here around 95 or so, 96. So we're at resistance, but really the last time we were here was November of 2021. So what's that, a 18-month high or so, if I'm doing my math correctly? But we do have resistance right there. Let's check out Carnival. Carnival's coming out of the ashes here. That to me is even more attractive because the stock has bounced off these lows and is really starting to take off. So Carnival has less resistance. Next resistance level on Carnival is about 18. Stock's at 14. So I would be interested in Carnival in this case for a short put spread. Where? I would say right here. 13 is as close as I'd want to get. Let's check the news real quick here. Okay, it's hitting its 52-week high. Bank of America has also upgraded Carnival Cruise Lines to a buy. JP Morgan, the same. JP Morgan overweight. So Bank of America and JP Morgan are all over all the cruise lines, lifting them up. I'm off track. I haven't finished the thread, but I'm compelled to come in here and grab some of this here. The IV is probably still a little bit elevated with all this good news. Across the board, these cruise lines are at annual highs, if not higher. Let's see what we can get right down here at 12. That's where I'd like to sell. I would go as close as 13, but no closer. Round numbers now. So let's take a look and see what's available on Carnival. All right, so what I've done here is I have options that expire on Friday, and then I've got my option chain in the simulated Thinkorswim account set to vertical. And then over here, I can start looking to see what's available. All right, so I told you I'd want to get down at 12. And look, there's no premium at 12. There's very little premium at 13 either. But let's look. We can get 3 cents on the 13 call put spread. 3 cents would be risking 47, which is not a good return on investment. 3 divided by 47 is 6%. There's a 6% profit between now and Friday. If you like that trade, let me put it up here. I would go for 4 or 5 cents, not 3. So let me post that as an alternative. But you keep looking. The idea here is to teach you to fish, not to just take the fish. So I'm going to go ahead and take you into the WhatsApp live feed. We do have a Snipers live feed if you're a subscriber to any of our products. Otherwise, just write it down if you don't have Snipers. So there's an interesting one, but go for 4 cents. I'd say at least 4 cents on that one. Now, if I want more premium, I can sell more time. So then I could say, all right, well, let's go out to the next month, and that's going to give us 6 cents. So 6 divided by 47. Oh no, 6 divided by 44 is 14% in 2 weeks. That's a better one. And that's one I think I would want to maybe, let's see if we can get to 1250s though. Just doing some shopping. If we did the 1250s, we'd get 3 cents. We do the 13s, we get 6 or 7 cents. Let's take a look at the stock chart. Are we willing to step up to 13? Yeah, and we got news now. We got the stock setting an annual high and a slew of upgrades, one overweight and one buy from JP Morgan and Bank of America. That's really good news. So 13 would be reasonable to me. So that's the trade that I'm going to do. And it's given us 7 cents at the moment. So our risk would be 43 cents, 43. Okay, so we could do, let's see, let's put this in the tool. You just got 10 cents?
Yeah.
Live?
man. Yeah. man.
Damn. Well, I got to get 10 cents too then. Nice job. Let me put this in Tom's tools so you can see what this would look like. I don't think we're going to get 10 cents. So Johnny got in already at 10 cents, and I can tell you that the option premium will evaporate throughout the next 30 minutes, probably. So let's create a trade here. I'm going to go to Carnival. Change the stock price. And then I'm just going to replicate what I have right here. June 23, 13 puts. So I come down here. What am I doing here? Oh, I'm in the wrong date too. Let me get to the current date. That would help. Okay, so we got June 23, June 23, selling the 13, buying the 1250. And let's just start with one. And then I'm going to hit my risk graph. Now, this is going to be Friday's data. The stock's not going to be shown where it is currently. But if I did, let's see, the credit that I can see now is now at
35 cents and 25 cents for 12 contracts.
Okay. And then you did the June 23s, Johnny?
Yes.
Okay. Now, what I see here currently is 5 cents. Now, is that worth it? Let's see. So this will do all the math I was doing verbally so you can see. So that'll give us 11% by next Friday, which is the rule of thumb is make 1% for every day you're in the trade. So this is a little shy of 14%. However, the probability of profit is not correct because currently the stock is up here at 14 or so. Is that right? The stock's at 1440. So currently the stock is up here. So this is not the correct risk graph, but at least we can see the risk. So now with $45 of risk, if I did 11 contracts, that risk would get up to 495. And so there's my max risk. That's really important. This part is critical that you control your risk. All right. So given all of that, I like it. I think the probability of profit will be probably in the 80 percentile range. So let's see if I can get 5 cents. I'm going to ask for more, of course. I'll ask for 7, and I want 11 contracts. Let me post this one up for you as well. Actually, I'll post it here. I'll post this. So let's go for 7 cents. I'm going to leave it at 5, and I'll take 5. But I'm going to go for 7. So let me paste this in the Sniper Live. And if any of these trades fill, of course, they get tracked on the website. And we'll post those after they get filled, if they do. So this is the one I want to go after. I'm going to ask for 7. Currently, the mid price is 5. Confirm and send. Send. Johnny, the lesson that you've just illustrated to all of us is the sooner you do this, the better. So these snipers work the best in the first 5 minutes. And so it takes me a time to run through and teach and describe and all those things. So the idea here is that you learn the system and you do it yourself. It's a fun little game to play. So it's showing 6 cents. I got 7 cents right there. Let's see what the stock is doing. Yeah, it's going higher. All right. So given that it's still rising, what do we got? 21 minutes into the market. I'm going to go back to monitor and I'll drop my price to 6 cents. It's still 1 cent higher than I was hoping to get. So let's set it at 6, confirm and send, go back to monitor. It's sitting there at 6, about to be sitting there at 6. There it is. And I'll just let that sit. And if it fills, we'll track it. Boom, we got it. We got it. So we just got 6 cents. Let me zoom back in so you can see. We got 6 cents. And that is our latest sniper trade. This will be posted on the website under the forum, I should say. And I'm going to save this in Sniper Live Trade. So now that we got 6 cents, look, we're right close to our target here. All right, so 13.6% max profit potential, 14 days, delicious. Now, this is really a good practice as well. You know, the rule is once you sell the spread for 6 cents, the instant we can buy it back for 10% of that, let's call it 1 cent, then you have a GTC order that will take you out and just completely eliminate the risk. You've captured 90% of the max profit. Go ahead and take it off. So then I come in and find CCL here under my position statement. I click each of the legs, click, control click to highlight both legs. I'm not highlighting the right thing. Click and control click, highlight both legs, right click, create closing order, and let's buy this back for a penny. It's not worth a penny right now. It's worth 6 cents. And that will be a GTC. The instant we can buy this spread back for a penny, then we have netted 6 cents or 5 cents, excuse me. So I'll hit confirm and send. And that's my little trap that's sitting out there. And the instant this spread is worth a penny, we're out. And we've captured 90% of max profit. All right, now let me complete the thread that I had started. I just got excited when I saw Carnival. It's in the hottest sector. Cruise lines are all going up together. Lots of money flowing into cruise ships, cruise companies. So probability of profit is higher, even higher. Okay, now where I was just now, again, let me take you back to where I was starting. Is we want to look at the tech sector. The Qs are the hottest sector. Tech is the hottest. Let's see what the hottest stock is in tech. So then I can go back to the sector tracker here in this free site called sectorspider.com. Go to tech, and we can see what the hottest stocks are on the tech list. No surprising, NVIDIA, Adobe, Advanced Micro Devices, Broadcom, all of those are really good candidates for bull put spreads. NVIDIA is up 35% over the last month. Adobe up 32%. So we can look at some of these stocks right now and then see how they're doing as we speak, as I speak. NVIDIA, yeah, basing. I want to see NVIDIA moving up. Adobe is a little more interesting. I like 440. I would go 420 would be better, but 420, 440 on NVIDIA would be awesome. Advanced Micro Devices, AMD. Strong. I don't like it when they're at resistance though. So 130 resistance. I don't want this stock to do this again. So the stock with the stock at resistance, I hold on Advanced Micro Devices, AVGO, Broadcom. This one's yeah.
Adobe has earnings this week.
It does. I didn't even see that. Yeah. Okay, so forget Adobe. Yeah, earnings is right here, which, thank you, Jim, is on 6/15, which is Thursday. So no on Adobe. So we can go through trade by trade, or you can also from here, now that we've identified the hottest sector in the hottest market, is we can start using some of the scanners in Tom's tools. You put this over here, that was filled. We'll put this on the website, Carnival, on just a bit later today. So let me just pull up the scanners. And from here, you know, I have a list that I've created for tech stocks. I'm going to copy this list and give it to you in the live feed so you can have them. There you go. What you want to do if you want to create this list is you copy the tech stocks and then you go to edit list and you paste those stocks in this list, select a name you like, and then hit save. All right, now that you have that, and notice that the XLK itself is also amongst the stock symbols. So from there, you can start looking around. Like there's various scanners you can use, high, low. So of all the stocks in the XLK, that's my list, which of them are at their annual highs? On the top of the list, you've got Apple. So these three here, these four, Apple, Oracle, Adobe, are at annual highs. They were on Friday, and these others are pretty close as well. So why don't we take the top 10 of these from Apple all the way to NVIDIA, and we save them in the holding list that you can't change the name of, called My Stock List. And now I'm looking at the 10 stocks that are at or very close to their annual highs currently. I put them in my stock list, and then make it simple on yourself. Go to searcher, single strategy, put credit spreads, highest probability of profit, and then select my stock list here. And let's let the scanner do all the work. We don't have to go stock by stock. And then we can see what's on the top of the list. Advanced micro devices. Good God. What's good God about it? Look. Now, the scanner will give you an out of the money option. So the stock on Friday was worth 125 and selling just underneath. 66% probability of profit to make 96% return on investment. What would that risk graph look like? Let's just take a look while I'm pulling that up. AMD. Oh, that's the one I just said. I'm not too interested in this one just yet until the stock clears 130. It could very easily retract and come down here to 115. Now, I do think that level will hold, but I would want to wait before I sell anything on this. I'm waiting for two things. One of them is the stock clearing 130 and starting to make a run up to 135. That's not happening. In fact, the stock has retraced. It hit, look here. The high of the day, 130.48, and then it has pulled back. It's not ready yet to breach 130. So then I wait for it to come on down here, maybe hit these lows about 115 or so, 116, hits those lows, begins a bounce like that, and then come on in and sell a 110 put spread right down here. Or even 115, which is a little close, but still, if we get our bounce, we'll get more credit down here. That's why you want to wait. I can do it right now, but if the stock drops, that spread is going to get more costly until expiration anyway, and I will be in a loss position at least temporarily. So it's better to wait for the stock to approach where you want to sell, and say 115, wait for it to bounce off of 116 and begin to rise, and then come in and sell 115 or better 110. Further away, higher probability. So this trade will have lower probability, but more potential profit. This one will have less potential profit and more probability. All right, so I hope that makes sense. So AMD, we're not going to play with. So we go down the list here, NVIDIA. This is what's interesting. The premium is so high. That's a 21-day trade. Not super excited about a 21-day trade, But let's look at the stock chart. You can also look here. Yeah, we talked about this one. It's basing. So we could see a breach of this, especially with Wednesday coming and the stock retracing, perhaps filling the gap. Doubt it, but it is a possibility. So we skip NVIDIA. Now, AVGO is a little different. Let's see. 750. I think 750 would be cool. Let's see what the stock's doing as I speak. Yeah, look, it's rising here. If it closes here, that'll be the highest close in over a year. I like 750 on this. All right. So let's look at 750. Why? Because 750 is support. 700 is better, less profit. Let's see what's there though. So I just go to trade. So again, what I want to do is 750 is as close as I would want to get. Maybe 700 or something in between. So let's just see what's there. I go to trade. These are live prices. Again, my option chain is in the vertical spread format, and I need more strikes. So I've got 25 selected there. Let's do 50 strikes. And then I find, I've already forgotten, 750. Let's see if we can get to 700. I'm not even going to go there. Even at 750, there's no money for this week. 5-point spread, 5 cents. Nope. What about if we go to June 23? I need more strikes here. I don't know why those strikes aren't there. 750.
But Mike, what's wrong with 5 cents in about 4 days?
Well, because the risk is it's 5 cents on a $5 spread. So your risk is 4.95, and that's what, 1%. So it's a little light. These are wide spreads. These are wide spreads. And so the risk, the value of the spread, max value is 5. So here, even if we got 25 cents between now and next Friday, which is what, 11 days away, 25 divided by 475 is just not enough premium. Let me try that again. 25 divided by 475 is 5%. So there's really not a lot of premium even at 750. So the only other option we have then is to come up and sell underneath. All right. So maybe 780. And again, I don't really want to get closer than 750, but I am liking what the stock's doing here. What about here? This is 775. Let's see what we can get there. Starting with the options that expire Friday, 775 gives us 15 cents by Friday. 15 divided by 485 max risk is 3%. Really not that interesting. Let's go here. How about 65 cents risking 435? And that's 14%. So that would be somewhat interesting. The pricing just fell apart. Let's see here. Yeah, there's not enough premium there at the moment, probably because the markets are expecting the stock to continue rising. All right, so that's the process, and I would love to sit here all day and do it. And Larry says UNG. All right, let me do that. We're going to go a little long. It's because I love you, and I just can't help it anyway. So I want to do this. I want to go long. So let's go to charts on UNG and see what it's doing today. Yeah, 587 was an annual low. What can we get for 5? I would go to 550 even, but let's see what the software says. We are now currently on the 12th. So I'm gonna hit the latest button. So the data, Tom's data becomes available at 10 a.m. It's now past 10 a.m. Eastern. So just hit the latest button until you get the date set correctly, and it is. And then all I'll do here is come on in and put in UNG. There's 2 trades here. the one I think I like the most is a long-term one. I'll find you two. We'll look at both. So we'll do a short-term one. If you select highest probability of profit, then it's going to give you a short-term credit spread. UNG, put your symbol there, search. Let's see what's there. There's none there, probably because there's not enough premium. So then what about a long-term out of the money put credit spread on UNG? And there's none there. If I don't see any there, then what I'll do is just go into the option chains and build it myself. You can do that right here in option chains. Type in UNG. We can look at, why don't we look at two? Why don't we try a 46-dayer and a 4-dayer? So for a 4-day trade, stocks at 611. Let's get some more strikes here. I want to make this 30%. I want to see more strikes on UNG. That this little setting here is defaulted at, for me, at 10% to give you closer to the money, but I want more strikes. And just looking here at mid price, you can see there's no premium for us unless we sell a 6 for Friday. So let's see what it looks like. This would be a Friday trade, risk graph. And this will give us 28% by Friday, as long as UNG stays above 6. Now, where is it now as we speak? It's a little close. It's a little close. Now, what could you do with this? Well, you could say, all right, let's I don't see the stock's heading down, so it's not rising. It is at 6 support. Is 6 support going to hold? Most likely it will, but it might not. So for me to take this one on, I'd be willing to own UNG at 589. And so what we could do here is just set it and forget it. If we get hit, we get hit. We own the stock at 6 by Friday, and then we hold on and we wait for the stock to rise. All right, so this is a really cool way to just set it and literally forget it. If the stock's at 6 or higher at expiration, it expires for 28% profit. If it doesn't and it closes below 6 and you get assigned, then you own the stock at this price here. All right, I'd be willing to do that. In fact, let's do it as a case study. And the next thing you got to figure out is how many shares of stock are you willing to take at 6? So if your max risk was 500 and you divide that by 6, that's 83 shares. Now we can't do 83 shares. We can only do 100 at a time. So your max, you'd have to at least be willing to put $600 or so in this trade in order to do it this way. Now so that's not going to allow us to do it with our risk management. But again, this is a hybrid where we're willing to own the stock. So with that said, you might say, I'm willing to put $3,000. $3,000 into owning this commodity, which will eventually rise. And so you go after 5, you make $55 by Friday, which is 28%. And then if you get hit with the stock, then you need $3,000, actually only $1,500 of margin, stock margin. And then you write it out, maybe sell calls against it and wait for the stock to rise. So that is an approach. Let's do a paper trade on that. Yeah.
If that's the strategy, why not move the long strike back to $5 and look at like a 12-cent credit?
If you sold this for 5, you're saying
No,
sell the
keep the short at 6, but the long at 5.
Okay, I keep saying this. I got to, George, we've had this discussion a few times, so I want to, let's I'll concentrate here.
Okay.
Now this is so you're getting attracted to the premium. So
yeah.
Let me show you something. What you're suggesting is to buy the 5. All right, then that's going to give you more credit. That's what you're looking at. I get it. 6, you get 1250. Yeah. But what's your risk also increases as well. So the tighter the spread, 99% of the time, this spread here, and it does, will give you more return than this one. So the tighter the spread, now, yes, more credit if you widen it, but your risk increases proportionally, driving your potential return on investment down.
But if I'm not going to ever try to buy my way out of this, I'm just going to accept the assignment. Doesn't matter.
No, it's a good point. Maybe that's another way you can handle this. Yeah.
That's what I'm saying. I'm saying if the strategy is it either expires or I accept assignment, then why not take the premium and forget it?
I agree. I like that.
Okay. All right.
You could even just sell a naked put, which is what I used to do for years and years. But here we can buy this 5 put for 1 cent. I like it. Let's do that. My max risk is 437. In this case, it's sized for 500 shares at 6. It's going to cost you $3,000 to own the stock. But with margin, they'll give you a 50% margin. Really, your capital required to manage the trade is $1,500. So let's do this, George. But George, I want to make sure that you get the distance between the strikes phenomenon. Does that make sense? Tighter the spread, more return on investment. Okay, good. That's what
it does if you're. I say if your plan is to buy your way out of it, if you get close to assignment, but if you don't, then I think
just the relationship stands. So the relationship is what I said, and now what you do with it is up to you. But just that's one thing everybody needs to understand. That's why we do on these short-term 7-day spreads to maximize the amount of return we get for actually 5 days. When we place the trade on Monday, you want to keep your spread distances super tight because it can make a dramatic difference on the return on investment. All right, now it's going to give us 13 cents here for 5 of them. Actually, let me put that in. I'll go for 13 because why not? The natural is 11, mid is 13. Super tight slippage on these things. I might even do some, I'll put a GTC order in here and I could fish for 13 cents. If UNG drops a little bit during the day, we'll probably get 13 cents. So, and there's no hurry. So if you like this strategy, then put a more aggressive price here. I'm gonna get filled so we can track it though. So we'll get 12 cents here. 5 contracts, 12 cents. Confirm and send. And then I'll let that sit. That'll very, very likely get filled today, if not while I speak. Now, the last one I'll do, so I'll post this one on the boards. Let me do it for you right now. And then we're going to do a long-term one as well. Okay. So there's that one. And then long-term, back to the option chain. And these are my long-term options. Just roughing it out here. There's 20 cents. Let me zoom in so even I can read it. You can see here that this 6,550 brings in 20 cents on 30 cents of risk, which is quite phenomenal. And again, this is one that you could do a set and forget as well. If you want to get a little more safe, you could say, I do the 550, 5 put spread, the credit will be around 15 cents. Let's do that one. And we'll do a long-term and a short-term and track both. Oops. I forgot to get rid of the other strikes that I was playing with. Okay, this would be a July 28. Let's see what it looks like. Wow. That's phenomenal, man. Look at that. 42% in 46 days. Normally, when we put these on, we'll take a lot less. So what you could do if you want to take a lot less and have even higher probability than 84% is you could take this trade long-term and really make it super high probability of profit. And you could say, all right, well, let me just drop it a little bit more. let's sell the 5 and then buy the 450. 50 cents further away, 15 cents credit now. 11% over 46 days. That's typically what we would do with this spread. And then, man, probability of profit on this trade is 94.8%. So there's two options there. The one I want to lean at, given that the stock is near its annual lows, is this one. But you can drop it and even have more probability. So this one looks really nice to me. I would want to risk 500 on this. So what's that? 20, 15, I'm just guessing. Let's see what 15, 525. I got to do 14. Okay, this is a long-term one. Risk graph. 42% in 46 days. And again, the same thing applies. Don't do anything with this. You got to be ready to take 1,500 shares of stock, 1,400 shares of stock. But man, it'd be very surprising to see natural gas trading at these low levels. Let's do this one and manage it as we would any other long-term credit. I'll post this as the long-term option. And that's in the WhatsApp live feed. Let me get it filled. I can remember what it is again. Let me find it. Yeah, that's the one. That's this just very, very sexy. Okay, so we're going to sell the July 28, 555 put spread. Find the expiration. July, what was it again? July 28. And we take this to vertical and make it a little faster. And we want to sell the 550 and buy the 5. It's giving us 13 cents right here, which is a little bit less. Let's put 13 cents in to see if we still like it. I think we do. Still a very, very nice return on this trade, 35%. All right, let's do, oh, that's fine. I'm fine with 518 a risk. So let's do 14 of these. 13 cents mid, natural 11. Let's try for 14. GTC. This is what I would do if I was trading it live. So we're asking for 14, current mid 13. Let's drop it to 13 and get filled. Both of these have yet to be filled, but likely will. Confirm and send, monitor, and they're both sitting out there waiting. All right. All right, we've gone 18 minutes over, but I love it. So those of you that wanted to go and didn't, thank you for staying. Remember, today we have earnings coming up at 2 p.m. Eastern. Everybody, Wednesday, you've gotten emails already. On Wednesday, we have our earnings mastery group making presentations. They just completed a 7-week live trading. I just got filled on something. They just got filled on. What am I talking about? They just completed their trading game for 7 weeks. They took their own trades, did their own adjustments. We had 2 teams that had APLs around 20%, give or take, a little high, one higher, one lower. Everybody made money, and they're going to present what they learned, their best trade, worst trade, best adjustment, top 3 practices to adopt, top 3 things to never do again, and then what they got out of the experience. So it was a huge success. We tried it out the first time. We'll be doing it in our other programs as well eventually. So you're welcome to come and join us. That's Wednesday at 5 p.m. Invite your friends and family. It'll be a nice event. Gerardo is going to also give awards out to various awards. I'm not going to tell you what they are yet. We're going to give other awards out, and it's going to be fun. So please join us. Everybody's welcome, whether you're in earnings or not. Gerardo, have I missed anything for this week? I don't think so.
I don't think so. Has been another great session. So looking forward to see everybody in their memberships.
Yeah. Hedge fund tomorrow at 3 p.m. Eastern. We're doing well. We're doing well everywhere. Okay, everybody, we love you. Have a good day, and we will see you soon. Pura vida. Hasta
Bye-bye.
luego.
Bye. Thank you.
Bye, Paulina.
Bye.